The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, every market day, and right here at 11 o'clock till Eastern, noon Eastern time. And that was the number, 877-927-6648. Let's run the numbers. Dow's down 183 at 16,133. The S&P is down, what did I see there? 17 at 1842. The comp index is down 43 at 43.64. Gold is soaring. It's up 32 at 1353. Silver's up 38 at 2150. We've got platinum up 17 at 1463. Poor old copper, high-grade copper down 3.21, down 2.7. Not good, not good at all. Crude oil up sharply. Of course, all this conflict adds to the critical key oil issue, and crude oil is up 257 at 105, and you've got bonds up a half a point at 135.02. Dollar is up 17. This is very interesting. Dollar's up 17 ticks at 79.89. Euro is down a little bit, and you would think with gold so sharply higher that in fact you would see the dollar down, but in fact no. Dollar's holding well. The minis that I'm showing right here made a peak C. Now, it's going to be very interesting. Let me just go to this chart. I hope I've got it all set up. Yep, I've got it all set up. There it is. In the Chapman wave methodology, what we always look for is from the lowest, most obvious low bar, in this case, the 5th of February, at 15,340, you want to see higher prices, and in this case, beautiful, sharply higher candles after that long-legged doji, a low on the 5th of February. And you want to see the MACD start to climb and the slow stochastic start to climb, which is exactly what they did. And what you want in the Chapman wave methodology is to be able to identify from the lowest low bar 4 successively higher peaks, and I grade them peak A, B, C, D. They're called legs. Just move this little one right here to show you what I'm talking about. From the moment that this starts to move, from that moment on there, that is leg A. The very next bar on the 7th of February still maintains leg A. So does the next bar, and on until you get lower high bar, and that makes a peak. And now what's really interesting is that you've got the IWM, that's the Russell 2000, and the Dow having made a peak D day, confirmed. And that was the neck, there's the head, this is the beak. In fact, there's the pattern that I drew for you much earlier on. And even more important, the stochastic is still at 87% and the MACD is still good. So what we're looking at here is some kind of divergence. The divergence shows up beautifully if you're looking both the E-minis. Let me move this away. Let me move this back. And if you're looking at Tiger TV, you will always see that my chart, the white chart on the left, this chart here is, how many? I don't even look at them all, but it has something like 2,392 issues. And that could be from indexes all the way to stocks, alphabetically, and mostly alphabetically. But most importantly here, that white column that you see, that is the daily chart. This middle one is the weekly chart, and the right-hand side is the monthly. Let me go to this particular index right here, the cash index of the S&P, and explain to you that it would be extremely rare. When I say extremely rare, I mean extremely rare to go to a peak C and make a major top peak C at all-time highs in the daily chart. Invariably, there has to be a different count. There has to be a way of counting. You say, maybe I missed something. There's no other way that I can count this right now. That was a peak C. It says there should be some resolution over the coming days, or at least a sense of a resolution, be able to give spark some kind of a rally, and that rally should take the S&P above 1867.92. Let me just type that in so I don't have 1867.92. And that 1867.92, I'll put it in gray because it's not the final one, should in fact be surpassed even by 1 penny. And that should take you to D, and then we've got to be real careful. The weekly chart in the S&P could be G/A, but this is very important. In the weekly chart of the, and this is the final week for the month, but in the weekly chart of, no, the beginning of the new month, I meant to say, in the weekly chart of the Dow, you've gone to a peak D. There's that resistance, that trend line resistance. And if you do the same thing to the Qs, 1, 2, 3, look at this. The QQQ series made a leg C, and now it's a peak C. And that also says somehow or other over the coming 3 to 5 sessions should be some kind of a springboard bounce that takes you to D, and then maybe that's where it fails. But it should go above 90.96. 90.96. 90.96. Got it. So that's what I'm looking at, and it's leg D. And it'll take us to extend leg D in the weekly chart. And look at the trend line. This beautiful trend line here. Continues up, and it stops right there. So we've got very specific things to watch on the Qs. No doubt, if there was a push this week, 91.38 would be very, very strong resistance. If it can get there at this point, of course, with the conflagration going on right now, I'm suspecting that, in fact, it's going to be just a sudden burst of sunlight, let's call it. And if that's the case, then what we're looking at is 2 things that will happen. One is there will be a burst of strength. Number 2, it'll be very selective. It'll be so selective that only a few of the indices will work. And in this particular case, if you look at the Russell 2000, IWM, making a D, 118.71 and pulling back, 90% is the stochastic, and the MACD is still very strong, but it's the outlook that I'm really focusing on in a number of these charts, because if the MACD, the fast-moving average, deflects lower, even if there is a bounce, I'm going to be watching that closely. So I'm expecting, as I said for a little while now, that there's a chance that this week see some kind of a topping motion. Maybe we've already started, and now it's extremely selective. I don't know. Let me just finish this chart right now. Question from Joe. Let me just finish the 120-minute chart. There's your A, there's your B, there's your C, there's your D, there's your E, and plop. That's exactly what happened at E. Plop. So IWM says the support is right around this area, maybe at 115.48. It's at 116.06. The low today is 115.88. We're going to be watching this closely. And even more important than that, we're going to be watching certain sectors. I'm also going to say, look, the TLT has had a fabulous move up. Leg C in a inside buy signal that's gone to a buy mode with a stochastic at 95%. Most importantly, MACD has just crossed positive, and you've finally got that test that I've been talking about for so long of the 200-period exponential moving average in the weekly chart, which is right exactly where we are, 108.84, and we're at 108.87 right now. So I'm watching that one really closely. That's making me different. Okay. Now, there are a couple of things that I need to look at here. I just wanted to have a quick look at the high-grade copper. High-grade copper, there it comes. Oh, man, this is what I've been talking about. Now I can put the down arrow because it went underneath the, there it is, down arrow. It went underneath the 9-period moving average for a number of days. And high-grade copper says H pattern that goes to the M pattern that I've been talking about for so long is going to be really important, because my suspicion is it's going to try to take out the 314.35 low of the week of the 7th of February. Now, I had a question about the VIX. Here we go, the volatility index. Look at this. Volatility index spiked today. It's closer to the highs. It's in leg B in the daily chart. Now the question is this the start of something big? Is this the start of something that says, hey, you might be looking at your work that says the S&P and I believe it's the New York Stock Exchange Let me just quickly check here in the New York Stock Exchange, NYA.X. Yeah, it has IWM, Dow, and the New York Stock Exchange are all making peak Ds right now. This is going to be really interesting. Can we fail at all-time highs at a peak C? And that, to me, is just I can't believe that we will do that, but I'm not going to fight it. We've already started implementing short positions, and we're light now in the long side. And all I'm saying is that Netflix was a question here, is that we need to look at some of these key stocks to see. Look, Netflix has made a peak D. It made that the pattern that I'm talking about, so many different charts. It's the leg. Look at this huge leg here, LEG. That's the leg. This is the body, BODY, always uppercase. That's the neck, NECK. That is the head right there, HE. And this could be the beak. We don't know yet. It's already gone into the body. So the body had 441.21 as the key metric, and today's low is 438. We've already gone underneath it. So we're going to have to be real careful. Now, I'm just going to do something, if you don't mind, just 1 second, just real quickly. Yeah, I'm out. So that means I'm looking at Netflix on a daily basis. Now, the thing about looking at Netflix on a daily basis is that I've got an alternate count in the weekly. The lady says, hey, maybe I'm all set up and I'm about to go lower because I'm at now 79% in the stochastic. And the math is starting to fail, but there's beautiful technical action in the weekly, and it says unless Netflix can take out 428.50, the low of the week of the last week, it could be just a sideways move. So the question is, do you short it? What do you do? Well, I would suggest that based on this particular market, yeah, we could get one sudden spring to the upside, but I'm going to suggest one thing that's really important, and that is to consider that if you were to go short, I would not mess around, because if Netflix was to bounce from 440 to 447 over the next two sessions, I don't think I want to stay short. So it's a very small percentage. It's a big price, but it's a small percentage. That's what I would consider if you were going to go short. And I'm actually saying to myself, have a little patience. You can short certain things, but have a little patience, because even Google has made that peak C, and I don't know any other way to count it unless A, B. Oh, wait a minute. Of course I do have another way to count it. That's silly. I forgot that. That, in fact, is the low. And we're looking at an A to a B to a C. And Google has done that D. There it is at peak D. Oh, I almost missed that. That would have been terrible. I should put a down arrow, but the day's not closed, and we don't know if it's going to close under the 9. The MACD is going to close negative. So now let's go back to this. And what I'm looking at is Google leg E, probably a peak E this week, E in the weekly chart, E in the monthly chart, just above very strong resistance. The monthly is not saying anything yet. It's saying, hey, great action for Google. Weekly chart says great action, but I am getting some signs that there could be a turnaround. And the daily is...
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Basil Chapman, Tiger Techniques Hour, 877-927-6648. We've got Tom in Phoenix on the line. Hi, Tom. How are you?
I'm doing well, Basil. Thanks for taking my call.
My
I have
pleasure.
a question on coffee. J.O.?
Yes. Making leg D as we speak. Do you have a position?
Yes, I do.
Okay. You've had it for a while.
Yes, I have.
Okay. So here's my recommendation. Out of the blue, 38.06 becomes the 200-period exponential moving average target. It wasn't even close recently. Now it is, but it isn't leg up. $1.35. JO is the symbol. It is the path. Dow Jones AIG Coffee ETN. And the MACD's at 93. The MACD is very strong. Stochastics at 93%. The unbalanced volume is saying we are a little extended here. Also, there's a fast-moving average that's just crossed over the 9 EMA, and it says be a little bit careful at this particular point because although everything looks good, we are in leg D. There could be about a point to go. It's a huge move from the 22s to the 37s, and because of it, now you've taken a little profit off before, right? And you've still held a core position. Is that correct?
Yes.
Okay. So now I don't know how much you've got left. Whether it is prudent to actually be taking off a little more right now in money management terms. I could say you could take something off right here at 37.12. It's a fantastic gain. It is so unusual. I mean, I don't have to show you the monthly chart of this, but to see the coffee move up, it's only done a move like this. I mean, back in August of 2011, it went from 59 to 73. This on a percentage basis from the low of 20.37 in November is a whopping move. But there still seems to be internal support based on the technicals. But it is becoming overboard enough for me to say, I don't know how you would feel if you took a little bit more off at 37.13 and the darn thing went to 41 or 42. And you had a core position, but you weren't making as much as you were. Personally, very often when we look at chart patterns, we should be thinking triangle, but the other way around, with the bottom of the tip of the triangle, and as it keeps going higher, you should be adding to positions, but you never know if whatever position you have is so powerful that it's just going to continue moving up, so that theoretically, looking back, you say, oh, man, I shouldn't have been taking off. I should have been adding. But we are in a money management business. You want to survive. You want to be there for the next turn. So I'm going to suggest, don't have to just jump to it right now. The day's young. It could still, anything could happen over the day. Could even move a little higher. But I'm going to suggest that you keep up the same plan of action, that you do take a little bit off now, both to reward yourself, but also because of the money management as beginning to D. We know that historically in the Chapman wave, that's kind of where you've got to be a little bit careful. And if it goes higher, that's great. But here's the other thing I would say to you. If you're watching your monitor all the time, yeah, things that happen overnight, but you could also just put a trading stop on a part of your position and say it's at 37.08, make a number. Let's go to the 120-minute chart. Yeah, it's 35.87. I think that's too much. I would tighten up. If you are thinking at all of taking something off, I would have a trading stop of like 55 cents. Yeah, it's nice to have an extra 55 cents that it keeps moving, but at the same time, I wouldn't want more than that. If it makes a peak D tomorrow, and you know that from a peak D, sometimes you can get a pretty quick and sharp, as we got in the Dow, a very quick and sharp pullback. But at the same time, coffee is acting. Let me just go to the continuous contract, KC. Coffee is acting. Yeah, I got D as well in the coffee contract, and it has gone above the 200-period exponential moving average in the weekly chart. This is a continuous contract. I don't feel uncomfortable saying to you, think about taking a little bit off, reward yourself. There are other ways of doing this. You could get into options and all that, but I'd keep it as simple as possible, which you've done. You'll still have your core position. I would not want to mess around to not stay in the core position, but also be taking something off, because a lot of what I'm looking at says it's acting beautifully. If it does have a pullback, the coffee contract, let me go to the one you spoke about, Jo. The 34.45 is the 9-period moving average. That's 3 points. I suspect taking a little bit more off here, keeping your core position, and then I would say let's wait to see if 34.32 gets hit over the coming 5 sessions, and you can always add it back. Hope that helps you, Tom.
Okay. Thanks, Basil.
Thank you very much for calling, and congratulations on a great trade. I'll be back, folks. Basil Chapman. Dow's down 178, S&P's down 60.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
And Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, just want to spend a little time here on the volatility index. You know that I consider it to be extremely important to have for years and years, and has helped us tremendously in being able to decipher the market. It's a wonderful little barometer. It's trading at 16.18 right now. Has a high today of, let me check it out. The high is 16.55, and the lows all the way down to 15.38. Well, the stochastic and MACD are moving up. MACD hasn't crossed positive yet, but there's a good chance that it could. And one of the things that I'm looking at here is that there's a cyclical, let me just put this in here just to show it. There's this H pattern right there, and that H pattern is broken out above the arch high, which was peak A at 1580 on the 20th of February. That says it could continue, the VIX could continue rallying on the daily, especially since the 200-period exponential moving average is at 1471. But I'm looking at the weekly chart, and the weekly chart has this pattern, this kind of, it's a very deep U-shaped pattern, U, then a U, then a U. It keeps bouncing back towards the 21, 22 level. And normally, after coming down sharply, which it has from the high of 21.48 made on the week of the 7th of February, it came all the way down to that to the 1344 level, retested 1349, and now is spring to the upside. There is a trend line that comes in resistance, and we'll be looking at that, because if today, the volatility index goes above 16.74. It's at 16.17 right now. That'll be very negative. Chances of the Dow will then be down about 225 points. If by the end of the day, and I was anticipating only because of that leg peak C in the S&P, that there was a chance that by the end of the day we could close nearer towards the better level of the market than the worst case, or at least by Tuesday we've got to start rallying. That's where we watch the volatility index, because below 15.10, let's call it 15, that's going to be a positive for the market. So we'll be watching that real closely. Let's go all the way to Singapore to William. Hi, William. How are you doing? William, there? You're there? I think you're on the computer, so it's a little running in delay. William, there? You're there? Whoops. He was here. He was here a second ago. William, if you're not there, just call right back again if you can. I think you want to talk about Apple, and I'd mentioned that there was a chance that Apple could rally. If it rally, let's see, I can't remember where we were. I think we were just under that. I think we were at 527 at the time, and you were looking for 530 or higher because you had the call options. And I said, if it spikes above that, you've got to be real careful. You've got to maybe take something off. But I had, 532.75 was the high the next day. I don't know if I had five as high as that. I think I had maybe the 532 level, went a tad higher. Now it's pulling back, but it's trying to hug the 9-period exponential moving average at 526. Apple is trading at 525.50, down 80 cents right now. A couple of things are going on. The weekly chart has got lower highs and lower lows, and that to me is always a very negative sign. It means you've got to fight so much to be able to break that pattern. In this case, Apple would have to go above 551.19, the high of 2 weeks ago, and that looks really difficult. Now, what's really important about this is that the weekly chart says that if at any point in this month, March, if Apple goes under 493, that's really negative. It has to get up to that 551.19 level, has to do it within the next, I'd say within the next week or so. If we can do that, that's going to be really positive. But I think it's just stuck in a trading range right now. So we're going to wait. We're going to wait for William to come back again if he is. So William, I'm not sure if you still. I hope you don't have those calls anymore. But if you do have the calls, Apple's actually quite nicely right now, considering the general market is down very deeply, and Apple's fighting very nicely, only down 88 cents. Even this morning, it had a nice spike up to the 530 level. It looks to me like there are enough buyers that there is definitely an attempt to get to the candle of the 20th of February with a high of 537 and a low of 529. It's trading at 525. So that's the way I'd be looking at it right now. If by the end of the day market is so poor that Apple breaks underneath the low of the day, 523, that'll be very poor action. Now, I had a question about Vertex, VRTX. Vertex is one of the pharmaceutical companies, one of the biotechs. It's had a great run. It's kind of in a trading range right now. The weekly chart made a peak E way back at 89.96 the week of the 19th of July last year. That was the peak D in the monthly chart. And it's been in a trading range since then with a very big move from 89 down to 58.06. And that 58.06 low is telling me that the rally that took it to leg B and then peak B all the way to 87.77, just 2 points off the high, off the all-time high, in fact, that's to be respected. So there seems to be internal strength at this particular point for a Vertex. The fact that it pulled back sharply on Friday with the market, and then and the market came back quite a bit, Vertex didn't, tells me that I've got to be real careful in analyzing this. I've got to look at it as more, there's resistance, and that resistance is terribly strong, and it is going to be the support that is absolutely key to this stock. If at any point Vertex takes out, I'd have to say closes under 79, 79.33 was the low of Friday. If it closes under that, there's a real good chance that it's going to try to test the 76.53 to the 75.89 area, the most recent significant low. That's the way I'm looking at it at this particular point. Now, a couple of things are happening, and one is that when you're looking at stocks like this, you've got to also keep in mind that it's the whole sector. And in this particular instance, the sector is saying that within the context of being in the IBB, and I believe it's in the IBB. That is the iShares, the Nasdaq Biotech ETF. That high of 275.40 with a peak D and a round number 274 high the following day on the 26th, so 25th and 26th. That is really important because what I'm looking at here is that the resistance at 265, the 9-period exponential moving average, is saying that there's a real good chance that this week we're going to make a peak E in the iShares in that weekly chart. What that does to the stochastic and MACD is going to be really important because the MACD is still quite strong. Even more important is that I've got an alternate count. I will not know what the alternate count is. I've got F/B. B is very positive. F says, whoa, be careful. So there are a bunch of things going on in the IBB, and it's a sector that we're looking at negatively. And at this particular point, a lot of work has to be done for this sector to actually repair and then to start to move higher sharply. And what I'm looking at here is the support in the IBB. If today's lower, 258.78, I don't think it's going to be taken out just yet. It looks to me like there's a little bit of a bounce left in IBB. But if it does get taken out over the next 3-4 days, that'll be very negative. Let's go to Freeman in Dallas. Freeman, how are you?
Pretty good, Basil. I'm sorry if you already discussed the VIX, Basil. But my question is, do you think this is this pullback is going to be? You say like for a pullback to really, we need like bad news. You think this is going to be really bad news? It's going to keep going down for a while. If it's going to go for a while,
if the stock market is going to go down for a while, right?
Yes.
Yes, and therefore the UVXY, which is the ProShares Ultra VIX short-term ETF, that's the one that he's talking about right now. Like the VIX index, it's at 73, it's at 74 right now, towards the high of the day. Everything about it says that it wants to move higher and it wants to push into the gap of 78.92 on the 7th of February, and the high the previous day, the low the previous day of 82.33. And if that's the case, and it does push into that level, that's going to trigger the weekly chart, and that will say any market rally after that might see higher highs and higher lows in the volatility index unless something spectacular happens in the S&P. And the S&P itself, SPX, has 1867.92 to the low right now of 1840. Let's call that, so that's 27, almost 30 points. I don't know what can happen to get the market to rally 30 points. Do you have a position in the UVXY?
I got a position, when the Dow went into leg D on Friday. I picked up just a small position, though, like about 25% of what I want. So my question was, how would I add to my position, or would you just recommend to keep that 25% position?
All right. Well, the way I'm looking at this right now is I wish that the S&P had made leg D. It would have been so easy. Everything I would have been able to just put on all the shorts on Friday, even this morning at the opening. But I'm going to make the suggestion that you've already got a position in the UVXY. It's almost at the high of the day. I think the market, the Dow at minus 190, S&P down minus 18, is really close to some kind of support that says there could be a little bit of a bounce. And that bounce, if the Dow is not able by, what's the time now, 11:45, if within an hour the Dow has not been able to bounce to minus 173 to minus 165, that's about a 20 to 30 point bounce from here. And if the S&P, which is at minus 19, is not able to get to a minus 15, That says to me that we're going to go minus 225, and then the best that we can look for is probably a move back to where we were just 10, 15 minutes ago. So now how do you do this? Just in the time we're talking, it's already moved up a point. Do you add to this position right now, or do you turn around and you say, I'm going to just have patience and wait? You know what I'm going to suggest? To buy it at 75 right now, yeah, that could be the right thing to do, but I don't see more than maybe a point and a half, and then a very nice rally sometime today in the market, which will say, okay, that says that the VIX, the UVXY could pull back. I'm going to suggest, if you've got a little patience, try to get it between 72 and 71, somewhere near the low of the day today, over the next 2 days, just to have a better risk reward. You're already doing very nicely. I don't want you to grab it now and then have you come back, and then you're stuck between having a pretty darn nice profit and a pretty darn nice loss, or not a nice loss. That's not the way I would want you to do it, even though this is such an ugly market. Who knows? Maybe it's down 275 by the end of the day. That's just the way I would look at it. You've got a position that has a nice gain. Do you want to buy at the very top, which is, you had patience before. Do you have impatience now to grab it? 5 points off the low of the day in one of the most volatile instruments that you can trade. I'm going to recommend have a little bit of patience, and if you don't want to wait all that kind of time, somewhere around 73.50, you could just nibble a little bit. Your objective is to try to get it close to today's low, and maybe even fill the gap over the next day or so. I suspect that there will be a sudden rally, a little good news rally at some point, and we'll have better entry points. I would not chase it. That's just my feeling right now. After all, you buy 75 and it drops down to 72. That's 3 points lower. Your other position has done very nicely, but now you've ameliorated that. You've got to look at the average, and your average now is not so great.
Sounds good, Basil. Thanks. And I got another question if you don't have people in front of you, too.
Okay. No, give me what is it?
It's Pandora. Do you think Pandora is a short right now? Over the weekend, I had my friends, and everybody now is listening to, they all used to listen to Pandora, but now they're all on Apple Music now. Do you think Pandora is a short?
Really? Okay, yeah, because I was listening this morning, and they said that Apple's going to come out with something for automobiles that will be combining everything, I think, from what I heard. I just heard a little bit. You know what I'm going to suggest? Pandora, based on what I'm looking at on the daily chart, not yet the weekly, although I've got it in leg F in the weekly and leg D in the monthly, if you were to short it, you could short it here at 37.10, but I'd make it a small position. The real test is over the week. Does it get to 37.70 to 38.15? If it can bounce to that level and then roll over, that's good. But if it bounces to that level and then just stays and doesn't come back at all, then I'd say, be a little careful. There's still internal strength based on the weekly and the monthly. The daily is saying peak D, good chances, a good opportunity to do it here. It's already been down this is the third day since it made its high of 39.58 on the 26th of February. So I'm going to say to you, I would endorse it, but a small position. It's a bounce that will tell you whether to add more or whether to maybe put a stop above the candle of Friday at the high 38.96. Hope that helps you.
It does. I appreciate that, Basil. Thank you.
Thank you very much for calling, Freeman. Dow's down 203, S&P's down 20. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, Ron. This is a Dow that's it's having a terrible time trying to hold any gains. It's down 205. S&P's down 20. All I can say is that based on the Chapman Wave, I should have got a great sell signal with that leg D that's fading now with a peak D in the Dow, and I can't believe that I've got a divergence between the S&P only at peak C and at all-time highs. I can understand the Dow fading underneath the previous high of the 31st of December, but the S&P at all-time highs, it's rare to get a peak C minus right at the top. So somehow or other, I'm anticipating there will be a moment of good news here that allows for a 1.5-day rally or something like that. Gee, to make 20 points up, I don't know how you can do that. It's more than 20 points. So, but that's what I'm expecting. And in the meantime, definitely you can start looking at some shorts. Question was, is Solar City a short or what's the count? I've got a peak C1, C2 right here. But the MACD's at 80. MACD's strong. The stochastic's at 84% in the daily. The weekly's still strong. The monthly's still strong. It's E and D. Weekly E, monthly D. I'm looking at this and I'm saying, okay, I'm going to give you a couple of days. I could have got a short-term top right here, but certainly if at 82.74 SCTY. If it starts to break down, it's down 224. It's going to close under 79.35 in the next day or two, and that'll be very negative. So I'm just on the short term. The weekly chart still hasn't given anything yet. So I thought I'd just mention that. The question is, what is the line in sand where you caught it a peak C fade in the SPY? Wow. Of course, when you've got conditions like this, I have to have a line in the sand, and I would have to say all the way down to 182.60. That was the low of the 20th of Feb. Take that out, and then I've got to say to myself, wow, that's very bad. And that turns the weekly chart negative, technically. So the way I'm treating it now is that we know our sectors that we want to be shorting. We know the stocks that are there, and you just got to go one at a time and see how each one works. And I mean, this is bad news internationally, but does the Ukraine affect Zillow or something like that? So you got to do each one individually, I think. But as an entire spectrum, I've got the very broad New York Stock Exchange at peak D. I've got the IWM, very broad IWM, peak D. I've got the Dow, peak D. So that says you've got to be careful. And I've been doing that. In my opening call, subscribers know that we've been raising, let me stretch over here. We've been raising cash, and we've been shorting. And the stocks that we have long are still holding quite nicely. Yeah, they're actually holding quite well. We're still long. And, yeah, that's the way it is. All right. So the story is, let me give you the scenario. Going into it, don't forget, stay tuned for Larry Pesavento. Great program all day. Great program with Larry. So I'm looking at this and I'm saying Dow's at 16,103. A close below 16,000, that's my line in the sand. That is really negative. That's number one. Number two is on the upside. By the end of the day, I don't think they can do it today. I think we've run out of time. But if by the end of the day, the Dow closes above 16,162, let's call it 16,170, that'll be way better action. Not great, but way better. Closes and the volatility index, just keep it real simple. Volatility index is trading now at 16.50. A close anywhere in the, going even higher than this in the 1670s, very negative. So we've got to be real careful. Now you've got the story. Remember I always say, bad news keeps the market down. We'll watch the bad news. Thanks for being here, and don't forget, Larry is up next with Trade What You See. A great show as always, and I will be back tomorrow. Don't forget my opening call. Check it out, front page of TFNN.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.